Hello, friends. Happy Thursday at this time of recording. So whether you get this Thursday or Friday depends on just how quick I can get it out to you. But nonetheless, hope you guys are having a great week. It is super stinking hot here in the North Texas area. It is freaking hot. So I hope you're staying cool. But let's talk rates and how they're not so hot. So basically, guys, weekly rates now still up in that high six, low sevens, depending on what you look at. Freddie Mac hasn't updated their website as of yet, but they're similar. 6.9 per the Mortgage News Daily. This is Investopedia that shows 7.06. So high six, low sevens. You guys can see the charts here. Green is good, red is bad. Today's not so much of a great day. But again, look at this. Since basically the entire month of June, rates have just kind of been going sideways, staying along this line here to where it's they go above it, go below it, go above, below. But it's amazing how they've just gone nowhere for the last 3 weeks. I do think we got some overhead resistance. That's going to be tough to beat. We've talked about that before, but ultimately I'm still making the call for lower rates in the next 6 months. Here's why. This is inflation, guys. Red is the consumer price index. That's the CPI. The blue is the producer price, meaning like the producers who actually make stuff. You can see theirs is much lower, and that's great because when it costs less to make something, they can then pass the savings on to the consumer, which will make things go down and down and down. So we're trending in the right direction. As inflation comes down, our rates will come down. Get this though, this is wildly good news, and sort of, it can also be bad news. I'll tell you why. Check this out. The median age for a home buyer is 34 years old, right? So here's the 34, people, here's the charts of how many millions and millions of people own homes and the age distribution between this. Not a lot of nanogenarians out there. The 90 to 92, really small. It makes sense, but that drop off kind of scares me as you get older. But 34 is the first time home buying age. Check this graph out on the left. 50 million people between the age of 28 and 38 years old. Right? So these are the home buyers. So this is going to be a massive wave of people. It already is starting, but they're also buying homes later. So the 34-year-olds out there, that's the average age. So throw in the fact that you got 60, 70, 80, 90-year-olds with homes. That's just a weighted average that says 34. So at this point, you got a lot of these late 20s, early 30s, mid 30s people not being homeowners yet. And look at the percentage of home ownership, this gray line on the right. Like such a low percentage of those that younger age, under 35 years old, actually own homes. So the population of home buyers is growing. It's going to continue to grow. So why do we tell you that? Because we've been saying all along, we don't see a bubble in real estate. While there can be some markets, select markets like a San Francisco that have seen double-digit drops, the reality is nationwide, we're still expecting another 6% appreciation this year. Same with what it was last year. And check this out, guys, housing starts. Year over year, the housing starts, the permits for what's going on is down double digits. Why? Well, it was about this time last year, not quite, but almost about this time when the market was turning and builders started building a lot less. So in other words, we're not keeping up with demand. Supply and demand says when there's more demand because of all these 28 to 35-year-olds buying homes or 38-year-olds, when those people are buying homes, we don't have the homes for them to buy. So it's going to make current housing go up. How do the builders feel? This is how good they feel. Overall, they're at 55. Anything above 50 is expansion. So 50 says like at 50, they think it's just okay. Below 50, they're contracting. They're not building as much. They're up to the 55. They're confident. They're building. They're doing things. Traffic is the only thing that's below 50 right now. And that's just my builders. You guys know it. It's just summer. It's hot. People are on vacation. We've got Father's Day. We got other things. But overall, the sentiment says things are happening. I'm not a huge Dave Ramsey fan, but I know some of you guys are out there, so I threw it in there. Dave basically agrees with us, right? While interest rates are rising, basically this is a great time to buy because there is a, quote, dramatic shortage in housing industry. So this is just showing that even Dave agrees with us. Millennials, Gen Zers, 50% of their income is going to basically put down for down payment. So we're sharing this with you guys to show that, big part of the down payment can be, if you guys are up for it, come from like 401k and things like that. But these are all just the stats showing what the average millennial has. But long story short, I think, where is it? It's coming up. To buy a house in Dallas-Fort Worth, you need to make about $72,000 a year this is to not be rent burdened, whatever that means by this article. And this is from, I think, Fox 4 News. So take that into consideration. And if they need that down payment, they can use their 401k in Dallas. Why is this a good time to buy? Because Dallas is still a great market. Matter of fact, we're like number 7 of the top 20. When I saw this thing, 13 of the top 20 places to buy was somewhere in Texas, which was nuts. But the housing cost overall, we are expensive, but it's going to continue to go up because Dallas-Fort Worth is such a great place to be. Next, Americans in their 30s have about 17 grand on average, but truly, I should say the average is 46,000, but the higher numbers skew it. So the median is 17. So my point is, if the average is 46,000, these first-time homebuyers, if they need to, can borrow from their 401k if they have to. I say borrow, not withdrawal. Borrow means you borrow the money and you pay yourself back. So if you guys have questions, let us know. We're here to help. As always, share, subscribe, the little QR code up here in the upper right. Let's get social, all that fun stuff. It would certainly help make my marketing girls happy if you did that. So we appreciate you. Hope you guys have a great week and stay cool. Bye-bye.